Folks, making money with Web3 has never been that easy. Never. Right now in 2025, you have the opportunity of making huge returns per month. And I'm telling you, between 0.2 all the way to 0.8, 1% per day with options. We have a free, no strings attached, free course for you to watch here on the topics. If you want to check it out, first link in the description, you register, click on education, and it is free for you to watch. And currently we're working on the second module, the advanced options module. But today, we're going to trade live right now. You're going to see me trading, no cuts, no anything. Me opening a position for you to watch. So you're going to see how easy it is for you to open a position on the topics, collect premium on a daily, weekly, monthly basis. This is pretty much as passive as it gets when it comes to options. So you're selling options for income. I'm going to teach you and I'm going to walk you through with the topics in today's video. So let's jump right into it. So we're cutting all the fluff right now because I'm losing the opportunity right now that I wanted to show you. We're going to jump into the topics and I'm going to show you how to do that. So you're looking right now at the topics. How did you get here, Everton? How do I find this? Well, you're going to be right here. You're going to click on options, Ethereum, because I trade on Ethereum most of the time. And you're going to be right here. This is what you're going to see. I'm going to click on 30 minutes. This is the 30 minutes chart. This is exactly like you see on TradingView. So as I said, I am missing a window of opportunity right here. So let me explain to you what you're seeing. You can switch between calls and puts, buy and sell. Everton, I don't know what is a call, what is a put. I don't know any of this. Help me. I don't understand. Well, again, we have free education. If you don't want to leave YouTube, you don't trust, or for whatever reason, you can find tutorials here on the channel, here on the topics for free, teaching you how to trade options. Just type how to trade, how to options here in the channel. You're going to find a lot of videos for free. But if you want all these lessons in a single place dedicated to you, we have the education tab. Just click right here and you're going to be redirected to the Bitopics Academy. We teach you from scratch there, from zero to hero. But today, just by looking at the charts here, we can switch to a 1 hour chart, for example. Look at this. Look at this. It is clear that we are trending downwards. Okay, we're trending downwards. So what is my strategy today? Well, I usually sell puts, but today I'm going to sell you a call to show you how easy it is to make income. Why am I going to sell a call? Well, if we go, for example, right here on TradingView and we go on the daily, this is the daily chart. The daily chart is also pointing downwards. You can see we have a downward trend, meaning that the market most likely is going to bleed, is going to go down a little bit more. So selling a put is a little bit risky because most likely we're going to be bouncing back. So we're going to be bouncing somewhere right here and then we're going to go downwards more. Why? Because we're making lower highs and lower lows. So this is the last high and this is the last low. So now we're going even below the last low and the next high is below the previous high. So when you're starting to make lower lows and lower highs, it means that you are in a downtrend. Again, you see lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and now again we most likely are going to be seeing lower lows. So what would I do in this situation? Well, I am personally going to sell a call. So how do you do this? It is pretty simple. You click right here on sell. Now you switch to selling options. And guess what? We're going to choose a strike. Let's say if I hold shift and I click, I get the ruler and let's go to 4,500. Yeah, let's go around 4,500. So let's go right here, 4,500. It says that for each contract that I sell, I get $8.18. That is fantastic. That is what we want to see. We want to see this high number right here. And this is what we're going to do. So right here, I'm going to put maybe 10 contracts. We can even boost it to 20 because I have that margin. Let's do 25, $12,000 in margin. Why did you try 3 numbers? Because right here, it shows me, right here, it shows me the total balance that I have. And then it shows me right here, the total margin required for this operation. And now it went down to 684. Still a lot of money, but see, it is bleeding because the market is going down and I have to react fast. See, it is always moving right here. So I'm going to click on sell and I'm going to click yes. And it says request. Let me actually move right here. Yeah, you saw right there. It was request processed successfully. And we can actually find it down here. Bam. This is the call that we sold. So we just sold a 4,500 call. We collected $167 and we need 12.5 G's, $12.5 thousand here in margin. Well, I don't have this margin. You can scale it down. You can always scale it down to maybe, if you go to $16, so instead of selling 25, you sell 2.5, you're going to be using $1,200 and not $12,000, and you're going to be collecting $16. That was the easiest $16 of your life. So what is my return on the margin? So the math that you have to do is pretty simple. So you get your premium, so 167, and you add 2 zeros. Because I have 167.93, I can just take the point out and put 16,793. So pretty much you get your premium collected, you multiply that by 100, and then you divide that by the margin. So 12,509.14. That equals to 1.34%. This is the return on margin. Everton, why are you focusing on this? Because the margin is not how much capital you have. The total capital that we had was 24,500. So my ROI on portfolio is actually 167.93 divided by 24,500, which was the margin. So 0.68, around 0.68% returns on a single strategy. Imagine making 1.3% on margin and 0.65 more or less percent on your total portfolio value. And now you're going to give me, well, but now I'm risking $12,000. How can I protect myself? Well, that is super simple. Now, instead of having just an option that you sold, you buy back a strike above or a few strikes above. If we switch right here to buying tab right now, and we sold a 4,500, if we buy back maybe a 46, let me actually see the prices right here. Yeah, we can buy a 46. You see, it is $2.32. So now if I put 25, was it 25? Yeah, 25 contracts. If I buy 25 contracts, I'm going to be protecting myself from losing all that margin. Why? Because you need margin when you're selling options. But when you're selling spreads, you don't need margin because a spread is a two-leg operations. So even though you're going to be seeing margin right here, what ends up happening in the back end, because we haven't set it yet, you're going to be protecting your margin, and your maximum loss is just the difference in strike multiplied by the contracts minus the premium that you collected. In this case, if I'm selling the 4,600, that is $100 times 25, that is $2,500, and then you take away the 69 right here, so around $100 that you take away, so $2,400 is your maximum loss instead of the $12,500 right here that you would be risking. So Everton, are you gonna buy this? No, I'm not gonna buy this because look at the price. I told you, we are melting right now. We actually just sold this one right around here where it was 2,500. So bam, and this expires tomorrow at around here. So what I just did right now, let me actually paint this yellow so you can see it clearly. All right, so this yellow line that you are watching on the chart, the beginning of it is right when we open this position, just right now. And this one is the expiration date. So tomorrow, the 30th, by 8 a.m. UTC, which in my time is around 5 a.m. So if by 5 a.m. the price itself stays below this line, I get to keep the whole thing. The margin goes back in my portfolio, the premium that I collected goes back in my portfolio, and everyone is happy. So this is it. You saw how fast that was. We are 13 minutes in the video recording. If there were no cuts, if there were cuts, most likely less than that. But you saw how easy it was for us to choose. We didn't even need to look at the Greeks. Of course, if you can look at the Greeks, you're going to be safer. You're going to see delta, all these other indicators that, again, we teach you how to do that in the course. So just check the first link in the description, register for free, and then you can see the course for free. And now, guess what? I just made $167. And I can do that pretty much on a daily basis, collecting income and growing my portfolio. Of course, this was a little bit more of a risky one just to show you, but I usually tend to stay between 0.2 and 0.3%. And this is how I make consistent income out of these options. Consistent income, consistent money in my pocket that I can go ahead and use. I can spend that. I can convert that into fiat and live off of it if I want to. So this is the strategy that I want you to know. I want you to just learn that. Why? Because it is all good and dandy for you to just buy and hold. But what if you want to buy and hold, and while you're holding, you want to still make money? So you're not only profiting from the price increase of an asset, the asset is also generating more assets for you. That's what we teach here and Bitopics. So if you want to see more videos like these, where instead of looking at news, instead of looking at other stuff, I simply just show that to you. If you want to see more videos like this, let me know down in the comments below. I love doing these sorts of videos. But as always, don't forget to like, subscribe, turn on the notifications, check out Bitopics below, first link in the description. In the meantime, have a wonderful rest of the weekend. I'll see you guys on Monday for another one. Peace.